Hello students, this is another video based on digital concepts and applicable right now these days. Digital assets. In accounting, remember we are not here for the understanding of the mechanism of digital assets. We are here for the accounting of the digital assets. You should know a bit of them, but definitely being an accountant, it is your job to have the knowledge how to deal them in your financial statements. So first of all, digital assets are the files created electronically and stored on digital storage on system in the digital storage drive or computer system. So any file you created and you are storing electronically on your system on any kind of storage or any computer system, that is digital asset. Majority of the work nowadays is on cloud, so you store a lot of your digital assets on. You can store a lot of your files electronically on cloud. Examples would be design files. For example, if you design something, those design files are your digital asset. But first of all, link digital asset with the framework's definition of asset. So framework tells us that assets are the resource under the control of entity through which economic benefits inflow will be there. So through digital assets nowadays, you can have inflows. Like if you have design files in your computer system, through those design files, you can earn, you can have inflows. Even you have photos. Like for example, if you have a natural photo in your camera, you just put that photo on the Google store or any proper platform. There you can sell that photo. Similarly, you draw some photography or some drawings. Now that drawing which you draw is not a digital asset, but if you take the snap of it and store it in your computer and sell that, now that drawing is now that drawing becomes digital assets. Nowadays, it is the age of YouTubers, TikTokers. We also, as a teachers, are now forced or are now basically moving from physical teaching to online teaching or towards virtual teaching. So we also rely on videos, and these videos are, you can say, one of the resources, one of the sources of income for most of the us. So again, example would videos, BTF Word, PDF file, Word files, computer branding, company branding, sorry, presentation. If you have some certain kind of presentation that will, for example, you have been told to prepare a presentation in a seminar, and in return you will earn money. You will have the inflows. Cryptocurrency. Cryptocurrency is a type of, it is a digital currency, and all the digital currencies are actually digital assets. Users data. Nowadays, the most important asset of any company is the users, their customers data, the database, customer database, users data, users account, high value digital files. So all these are examples of digital asset. The discussion is how we should treat them, whether treat them monetary asset under IFRS 9 or non-monetary asset. So the definition over here, if you see, non-monetary, whose value fluctuates frequently, whose dollar value of the benefits are not precisely determinable, and they are not readily convertible into cash. And monetary assets, whose value does not fluctuate, dollar value of the benefit determinable, and they are readily convertible into cash. Now come to the point, digital assets fall in what scope, in whether they are monetary assets or non-monetary assets. Definitely, they are not monetary assets because digital assets value fluctuate. They are not readily convertible into cash. Number three, their value of the benefits vary. So they do not fall under the monetary assets IFRS 9. They fall under the category of IS 38. So first of all, we have decided that we will apply IS 38, including cryptocurrencies, IS 38. Now, whether these digital assets will be recognized in SOFP or not, that will be decided by IS 38. You know that there are four main criterias for the recognition. The first one is asset must be identifiable, means asset must arise from contractual or legal rights, or it must be separable. Point number two, asset must be under the control of entity. Point number three, economic benefit inflows are there. And number four, cost can be measured reliably. So if all four criteria are met, we will recognize the asset, digital asset under IS 38 in SOFP. So what we have done so far, first of all, we have defined digital assets. Number two, we have basically assessed which standard will be applicable. Number three, conclusion that it is basically the case of IS 38. Number four, we applied the recognition criteria of IS 38. And number five, now the measurement. Measurement says that you will basically record them at cost model initially and will charge amortization or impairment accordingly. Now, the question is whether digital assets have definite life or indefinite life. Definitely, it is not the case. Majority of digital assets, because digitalization is basically bound to change. So, if there is a change, we cannot predict that it is a case of indefinite life. Maybe in some cases it's possible, but in majority of case, digital assets are not subject to indefinite life. Rest, the principles are same. If digital asset is has a life of definite, amortize it and conduct an impairment test. If there are indicators, according to IS 36, treat the digital asset as being impaired. If digital asset has indefinite life, you will now conduct an impairment test annually. Okay, so this is actually the case of digital asset, and you should know about it. You may have a question on it. Okay, take care.